letting my hair down. You thought I didn't have any. I'm gonna prove you guys wrong. Watch. We're gonna do the thing.
As most of you already know, trading Forex gives you the opportunity to both buy and sell different currencies. And this can be very beneficial because you don't have to wait for price just to move one particular direction in order to make some profits. However, it is important to understand the terms that are used when associating price action with direction. And this is where the term bulls and bears comes into play. So keep watching. What is up, guys? Candice B here. Thank you for coming to my channel. Welcome back to my subscribers and welcome to my new ones. So in today's video, I just wanted to keep it nice and simple and discuss the bulls and the bears when it comes to Forex. Now, this is very basic Forex 101 lingo, so it shouldn't be too difficult to grasp for those who don't know what bulls and bears are. So put very simply, if you hear the term bulls or bullish, then that just means that price is moving up at that particular time and that there are more buyers than sellers in the market. The base currency, which is the currency on the left side, is getting stronger against the quote currency, which is the currency on the right side. So therefore, vice versa, when you hear the term bear or bearish, then you know that price is moving down and that there are more sellers than buyers at that particular time. The base currency is getting weaker against the quote currency. Now, as a disclaimer, how I explain the information in this video is just from my point of view and how I interpret a bullish market, a bearish market, what it all means. So definitely take it with a grain of salt, but you can absolutely use this video as a resource as you continue to research on your own as well. Now, if we're talking about the Japanese candlestick charts, then the color or the shade of the candlestick will help you to determine if price is bullish at the time or if it is bearish at the time. So you might have seen different types of Japanese candlestick charts with different color schemes. So there is the green and the red candlestick color scheme, which would just basically show that the green candlesticks are bullish and the red candlesticks are bearish. But there is also different ones such as the white and the black candlestick chart, where black would mean that it's a bearish candle and white would mean that it's bullish. And you can really just customize your MT4 to your liking. So you don't have to use a particular color. You can really just use any color scheme, but it really just depends on the color scheme that your eyes get accustomed to. So I personally prefer the red and the green color scheme. So currently my charts are set up where the green candlesticks are bullish, the red are bearish. One thing to keep in mind is that the color or the shade of the candlestick does not necessarily determine the overall direction of price at that current time. So the goal is to figure out whether we are in a bullish or bearish market, because that will allow us to determine price's desired direction at that time, which will then allow us to increase our edge overall. So just as an example for today's video, we will be looking at GBP JPY and just seeing if we're able to find when price is in a bullish market and when it's in a bearish market, and how that can correlate to price action at that time. And this is a really good practice just to do when you're backtesting, just to practice being able to determine the direction of price at the time. So it really does just come down to practice and putting in that chart time, you know, whether it's an hour a day, 30 minutes a day, 2 hours a day, and just really being consistent with that so that it really just gets easier for you to understand what price action is doing. And as you gain more chart time over weeks and months and years, then you will notice that it gets easier to determine what kind of market that price is in at that time. So let us look at GBP JPY right now. Now, if we're keeping the notion of top-down analysis, I'm just going to go ahead and start on the monthly. And this is just something that I do for practice, to be honest. I will just look at a blank chart and even just go back in time. It really doesn't matter where in time you go back, because you just want to see the different rifts, the different ebbs and flows of the market to see what price was doing at the time, if it was considered a bullish market or if it was considered a bearish market. So just looking at this chart randomly, if we know that price, when it is going up, it is in a bull market, and when it is going down, it is in a bear market, then you can start to see just when it's been doing what. Let's start with the bull market. Let's see when price has been going up. So really, I'm just looking for rallies. If price is going up continuously and you just keep seeing more green than red, then you can tell that this, from here to here, was clearly a bull market. The buyers were more involved than the sellers, and they just took over. So there would probably have been multiple opportunities just to take buys as price just keeps moving up overall. And then if we're looking to determine when price was in a bear market, then it's pretty clear to see, you know, these type of instances when price is just going down overall, just really pushing down. Even here, price just really pushing down and just moving in this bearish channel. So it definitely should not be too difficult to see the direction, especially when we're looking at a higher time frame. So that is the good thing about higher time frames, right? Because the higher the time frame, the stronger the direction will be, because it's a longer term outlook. So we can definitely say that on the monthly, that price was very bearish in these times. But if we drop down to the lower time frames, we'll see a lot of different types of market movements, which might not show you that price overall was bearish. So always just keep in mind, if you want kind of an overall look, an overall idea, a better, stronger confirmation of the direction of price, whether it's a bullish or a bearish market, then keeping to those higher time frames would be helpful. And then dropping down to the lower time frames to see more detail will just kind of add to your edge. So that's exactly what we're gonna do right now. We're gonna go down to the weekly. Again, just practicing seeing when price would be in a bullish market and when it would be a bearish market. So right away, I do see that price was definitely in a bearish market in this area here. At first, it was moving up, as you can see. It made this kind of double top and it failed to make a higher high, causing price to drop. So this was probably a very premium level, especially for institutions to get into a better price. They were looking to sell, but there were still a lot of buy orders. So once it hit this premium level, you know, retail traders psychologically would be kind of getting scared of this area, especially if they've been just catching this rally. They'll get nervous and they'll start to want to close out on their positions. So as that happens, sellers comes into play. And when those institutions come in, they want to get this premium level, they're gonna sell, and that's what's gonna push price down very hard. So that's what happened here. And then as you can see, price came back and broke this area here. And then as you can see, it started its rally down, creating lower highs and lower lows. So with trading in Forex, the more confirmations and the more confluences, the better. It just helps you to increase your edge, and as a result, it increases your chances of winning, and that's the goal. Now, there are 3 things that we're gonna look at in this video just to keep in mind when it comes to determining a bearish and a bullish market. So the first thing is structure, you know, seeing the higher highs, higher lows for a bullish rally and a lower high, lower low type of structure for a bearish rally. And the second thing is that we need to pay attention to those pivot points, the pivot points that actually change the direction of the market. So when price is overbought or oversold, that's when you'll start to see a flip in the direction, a flip from a bear to a bull market or from a bull to a bear market. And the third thing would be sideways markets. So just seeing when both buyers and sellers are indecisive, those points in the charts we want to see, and we want to understand that this is what is happening and whether we should stay away, what should we be looking for, etc. So these 3 things will hopefully ideally help you to determine a bullish or a bearish market. So as I was already mentioning about structure, you can see that price, when it started this bearish rally, it had bearish structure. It was creating lower highs and lower lows, and that just helps to confirm that price was moving in a direction that it was moving in. So once it's confirmed that it is a bearish market, so let's say you saw this rally up, you saw that price was not able to create a higher high, but it kind of created the same high and then it essentially dropped. Because if you actually take a look at this on the weekly, even though price came up and failed to make a higher high, it was still in this higher low type of structure. So you can even see price was still moving up. It hadn't broken this structure just yet. So that's why confirmations are important, because you want a confirmation that if price is indeed going down, and this is not just, you know, one of those impulse moves just or a retracement just to pull back up, you want to make sure that price breaks structure, that it retests the structure, and then it continues in the other direction. Structure is definitely a really big indication of just the overall market direction. So in this case, once it became bearish, then we see this lower high, lower low structure. And yeah, we can see it here, but this is all just kind of confirming. This is just price really starting the structure, and then this is when price starts to continue it. So when you see that low, that lower high it came up to retest, then you know, sells would be pretty rampant here. This is premium price, and you want to see your confluences, so you see that this is a zone right here, and obviously, you know, whenever price breaks a zone, it wants to retest it. So this would be a really good indication that price wants to move down, and then you kind of just follow it. So it's as simple as that. So how do we know then when price wants to go into another direction? When price is done rallying one way, when the bears are finished and the bulls now want to enter and change it to a bearish market, well, we have to look for those pivot points. We have to look for those points where, just like here when price was moving up and then switched, the same thing happening. Price was moving down and then it switched. So if we just continue to look at the weekly, then you see that, you know, that push down, there was still some desire for sellers, but then it kind of bottomed out in this area. So with here, it's kind of just like, if you are a longer term trader, then you'd be waiting, because initially, if it's still a bear market, then price would continue with the same structure, you know, lower highs, lower lows. It's still doing it here, still breaking structure. So then you would be expecting, you know, a retest of here and a further push down. So when you're looking for confirmation if price is going to go further down, well, then you're keeping in mind what the candles are doing here. So this is the first indication of exhaustion. So essentially price had opened the beginning of the week, it pushed up, and then it pushed down very hard, and it closed with a pretty exhaustive wick. It tried to push further down, but then the bulls came in and pushed price up to here, to this area. And then when the new weekly candle opened, it did the same thing where it kind of pushed up a little bit. That makes sense, because with this exhaustive wick, then, you know, it makes sense that when price opens the new week, that it will still have a little bit of energy to push up. And then what happened was, again, it tried to push down, it filled this wick, but then it was not able to close below. So it ended up rejecting again. So just between these two candles, that is an indication that price is getting exhausted. The bears are, you know, running out, and essentially this is a premium price area for the institutions to come in and push price back up. So that is exactly what happened when price failed to kind of break this area, retouch it, and move down. As you can see, price ended up actually just opening. It did push down a little bit, but then it closed. How it closes is more important than how it opens, in my opinion. So price ended up closing above this kind of area, so it broke it. And then as you can see, the next candles had no hesitation. They were just moving up. So these little pivot points, just understanding, I know it is hindsight, of course, you know, this is back in 2016, and it's much easier to look at a chart after the fact, but this is what you have to practice, right? So that when it's happening in real time, then you know what to look out for. And if you see a candle like this, then instead of just entering a trade for another sell, you're gonna wait and see what price wants to do. And then when you see this second candle, you're like, okay, price is still very indecisive down here, so let's just still wait. And then you kind of see price playing its card. You want to react to what price is doing as opposed to just assuming. So you wanna see price play its hand first, and then you react. This is how you would see price want to change direction, these pivot points. So we can even look at another example. Let's just go down even further. Let's go to the 4 hour and see if we can see these type of pivot points. Yeah, so in, I guess, more recent action, just mid-March. So we see that price on the 4 hour was rallying down pretty heavily since the end of February till mid-March. So a couple of weeks, price was just pushing down. Again, just kind of creating lower high and lower low structure. Nothing was really stopping it from continuing to do that. And then once you see that price kind of bottomed out here, then first thing really is, you know, that there's probably some sort of area. So there's some sort of, I would say, support area. So if we even just kind of map that out, and I'm just going to go back to the higher time frame. I'm going to check the daily to see if anything touched this before. Yeah, so if you go even further back, I mean, again, I personally like to stay more in current time, but just for the sake of practicing, if you go back and see in time, price had kind of come down to this area. Mind you, it's a zone. I just put a horizontal line just to kind of map it out, but it's a zone, so it's not going to be exactly hitting here, but it did come down to this area. Yeah, so that was probably a catalyst, one of the reasons why price wanted to, you know, change direction, why it became a pivot point, and why it started to reject, you know, the bears. So like we saw in the weekly, again, just price wanted to push down. It did pretty well. It did push down quite a bit, but it closed with an exhaustive wick. So that is one indication that, again, the bears are kind of getting tired. The bulls might be ready to enter. Because we want to wait for more confirmations, we want to wait and see how price opens next. So when you look at this, oh, I'm still in the daily. So I'm just going to go back down to the 4 hour. You actually see within the day quite a bit of rejection. So this is kind of where the lower time frames, I mean, even though H4 is still a pretty high time frame, I like the H4, but this is still a good indication of just more detail of what's going on. You can't see that on the daily because, as you saw, the daily just had one exhaustive wick. But when you come down here, you see more things happening. So you see that price really once, twice, 3 times was unable to push further down. And what had happened was it kind of pulled back. It had this bearish candle that kind of came back down to retest, and then as you can see, it started to push up. So after this happened, this created a support area, and then price started to move up, creating support areas as it went along, creating higher highs and higher lows. Excuse my drawing, but yeah, you get the idea. Definitely comment down below, let me know if you guys are understanding what I'm saying or how I'm explaining it, but this is, again, how I interpret the market. So this is just what I do to practice and backtest, just to see the pivot points, see when price is changing structure and moving in the next direction. And then the third thing that we wanted to look at is determining when price is moving sideways, just those consolidated times when both the buyers and sellers are pretty indecisive. When price is moving up, it's just because there's more buyers than sellers, and when price is moving down, there's more sellers than buyers. So if price is moving sideways, then essentially there would be an equal amount of buyers and sellers, or a similar amount where neither one of them are able to push price in their own direction. So it's just kind of moving sideways until a breakout happens. And then once the breakout happens, you want a confirmation to determine if that breakout is indeed going to go in that direction. Once you get that confirmation, then boom, you can start to figure out where to enter. Let's go down to the 1 hour just for fun. Might as well utilize different time frames. Any time frame you're able to do it on, I feel like it's smarter to do. I feel like it's very smart to know how the higher time frames work as well as the lower time frames, so that you can use them both in confluence. And again, it just increases your edge. So on the 1 hour, I see this consolidation area, and how I map it out is I just use this I use a box. So you can see, again, this is hindsight, right? This has already happened, so it's easy just to map out, but this is still good for practicing because it helps you to get your eyes accustomed to what you should look for when you're looking for consolidation areas, because I personally avoid consolidation areas. I'd rather a breakout and then, you know, a retest of it and then boom. So yes, this is the 1 hour, and we're looking at just this consolidation area. Price really didn't know what it wanted to do. Buyers and sellers were just kind of boom bouncing back and forth, doing whatever, until we see this happen. So as you can see, as price is kind of continuing to consolidate over, it looks like a couple of days, then you see this breakout to the downside. You see this breakout of this, this consolidation area. And if I zoom in, so like I said, I personally look for a breakout and then a retest of the consolidated area where it had just broken out of. So in this case, price had broken down. It essentially came back up to retest. And again, it won't be perfect, right? This is a zone, this is an area. It's very, you know, general. So price came back up into this area, and this was over the weekend actually where price ended up gapping. So if we're looking at this is just a waiting game. You're just waiting, and you need to see price play its hand, which it did after the weekend. So this is something where, let's say you're looking at it on the Friday. Was March 6th a Friday? Let me check. Yeah, so March 6th was a Friday and price was just doing this all Friday. So, I mean, this is another reason why trading on Fridays, you shouldn't be forcing yourself to take a trade, because a lot of times this is what you'll see. You'll just kind of see price being really exhaustive, just chilling, relaxing, because, you know, the institutions, they're done for the week. So either way, orders are still being filled over the weekend. So, you know, even though the market isn't open, there's still orders being filled. So once market opens again, you see this huge gap down, meaning that, you know, there was a lot more selling orders, a lot more bearish orders being filled, and then we see price continuing to push down. So in this case, what would have been helpful, if this is March 8th, which is like the Sunday, waiting for candlesticks to close would be the best thing. As you can see, it kind of just started the bearish structure. Like, it really just boom, 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 it started it, and that's a huge drop. So going down to the lower time frame might show it a little bit better on the 30 in terms of where your entry would be. So price had gapped down, it came back up and retested just where the edge of the gap happened. It did not come all the way back up here. So that's another thing to keep in mind. You won't see it perfectly play out how you visualized it. If this is what you visualized, price breaking down, coming back up, and then going down, that's not what happened. So you have to be versatile. You have to understand that price might not do exactly what you visualize it to do. However, this huge bearish candle was a catalyst. It was a confirmation that, you know, the bears have definitely come into play, and we're waiting for that perfect entry. And then as you can see, price kind of solidified that by creating that lower high, and then boom, it just plummeted. So catching that move would have been epic. That's how I determine consolidation zones. I look for price moving sideways, I map it out with just this rectangular box, and then I wait. I wait to see if price breaks up, retests and goes up, or price breaks down, retests and then goes down. And it's as simple as that. You really shouldn't be rushing these type of moves, because it can take a while for it to play out, especially when price is consolidating for whatever reason. So yeah, just be wary of it. Another place I'm just seeing this huge consolidation. So this is back in October, November 2019, huge consolidation area. It just really happened for a while. This happened from the mid-October till early December. So price is just moving. And not to say that people, you know, don't catch moves in these times, but it is obviously a bit harder. Really, it's just the bounces that you can be trading, but when it's kind of in this middle area, it gets really confusing. So as you can see, price was just moving sideways, and then it started kind of getting this buying pressure. It stopped kind of bouncing as much to the downside, and it started pushing more to the upside. And then as you can see, we see that break. So mind you, this is the 4 hour. We see a break, and obviously I can personally see that that was a retest, but for those of you who want a better visual, let's drop down to the 1 hour. All right, so it's a bit more clear that we can see price came up, it closed above the zone, which is a great confirmation. We definitely want to wait again for those candles to close. We wanted to close outside of the box, and then it came back down, it retested the box, and then it pushed up, and then it started a little bullish rally. So very straightforward. I hope in terms of my explanations that you guys understand. So that is pretty much the video today. I hope it helped you guys a little bit in determining the bulls, the bears, what would be considered a bull market, what would be considered a bear market. Again, everyone has a different interpretation, but I try to keep things very simple. I'm a very simple person, and visually, that's why I like to have clean charts, is because it helps my eyes to determine the direction of price. And again, this was all hindsight, so I encourage you guys to try and practice this in real time and just monitor and see how price plays out. So I feel like it would be beneficial for anybody to do, whether you're seasoned or whether you're new. I personally still do this as well, and it just helps. It just helps kind of keep you on your game and keep you understanding the price and the market itself. So that is the goal. But thank you guys so much for watching this video. If you enjoyed this content, if it was helpful in any way, then go ahead and smash that like button. I would really appreciate it. And also comment down below. Let me know your thoughts. Let me know how you determine a bull market versus a bear market, what confluences that you use. I would love to hear them down below. And also, last but not least, don't forget to subscribe so you know when I post another video. And in the meantime, feel free to watch any of my other videos on my channel. I would love that. Thank you guys so much for watching. I hope you are staying safe, and I will see you in the next video. Have a great day, week, and life. Bye.